recording. So this book is a nice book to read before start learning about technical analysis because it's gonna put you on the right mindset for the markets. And it says here that irony is, of course, that on the surface, trading looks so simple, when in fact most people find it to be the most difficult and the work that they undertake. Success will always seem so close and yet always so elusive. And this frustration will come until the trader adapts to the conditions that exist in the trading environment by learning a new thinking methodology. One that works most effectively in the environment and not what he thinks will work based on his cultural and social upbringing. So you got to change your way to think. Pretty much, here's the book. I'm gonna show the book here on the screen.
You can use the other box to build the book once.
Can you see that?
Too much life.
Cultural learned behavior that result in an unsuccessful trading experience. So here are the 10 things that we most do when we're learning how to trade. So in an emotionally charged situation that requires a split-second decision making, which could lead to a failure of some kind, there's a little time to compare the present event with previous market experience. You probably wouldn't even notice if you had behaved similarly in the past and suffered the same disaster consequences. Because the present situation is so immediate, you may have not conceived how typical and even toddlers your behavior might be. So refuse to define a loss. That's one of those typical things. We were losing in a trade, and then we say, okay, we maybe we already lost this much. I'm gonna just leave it on and see if it comes back or something. You gotta accept the loss. When that trade didn't win right, you gotta just accept it and get out without any emotional thinking, you know. So refusing to define a loss is one. Not liquidating a loss trade. That's the one that I was talking. Not liquidating a losing trade even after you have the knowledge that the trade potential is greatly diminished. Like I said, like if you see that the pattern broke or it's coming down and it's not going to hold the support anymore, and you know that that trade is not good anymore, and then you're still holding, and you got to change that. You gotta just accept it and get out fast. You know, getting lost in a specific opinion or belief about market direction. From a psychological perspective, this is equivalent to trying to control the market with your own expectation of what it will do. I'm right, the market's wrong. Well, the market is never wrong, never will be. We're wrong. 4, focusing on price and monetary value of a trade instead of the potential for the market move based on its behavior and structure. What that means, like if you're looking at your bank account and you see your money going up, you're gonna get excited. You're gonna be like, yeah, I'm making money, and then you're gonna be emotional. And then you see your bank account going down. What are you gonna feel? You're gonna feel bad. You're gonna panic. You know, that's gonna make you not. It's gonna make you get out of the trade early. or take a profits even if it's not reaching your price target because you saw the money right there, or leave it because you're making money and you're gonna stay on your trade because I'm gonna make more, I'm gonna make more, and then what happens? Pull back, your money is down, and now you feel bad. That's what I mean with that. Like if you're looking at your money and your P&L when in your position, you're gonna start acting emotional. So don't focus on that. Focus on price action, on the structure of the stock, you know. So another one right here, 5, revenge trading, as if we were trying to get back at the market for what it took away from you. That's the bad thing to do, like revenge trading. That's another, most of the things that can wipe your account. You made a trade, that trade went wrong. You made another trade went wrong, and then you're losing money, and then you want that money back now. That way of thinking is gonna wipe your account. You may get it back once, 2, maybe 3, but if you do it most of the time, you're gonna lose because you're not following a plan. You're just trying to make the money, and it's not gonna make you do the right decisions. So don't ever let that happen. Revenge trading. If you want to trade, just get up, take a walk, or don't trade the rest of the day. Trade the next day. It happens. Losing on trading, it happens a lot, and it has to happen. That's part of the game. We don't know if we're right or wrong. If you saw those videos, it tells you right there. You don't know if the next trade is going to be a winner based on your system, right? You're not just going to go and buy it and say, oh, I'll see if I win. And you could even win. But if you want to do it consistently, it's when you have to have your system, your trading system, and combined with all this stuff, like mindset, your money management, all that. So not 6, not reversing your position, even when you clearly sense a change in the market direction. That happens when you say, okay, I'm gonna go long. I'm gonna go long here.
Both are marinated for 12 hours and freshly prepared.
And you're like,
It's crunchy and juicy.
okay,
Get them today for only
that's coming down. It's coming down. It's coming down to the support. Rub the support, and now you say this coming in another direction. You can get out of that position and get in the other. You know, like if you got calls, you can get puts because you can see because that trade, that pattern, or that key level that you were watching, it lost its support right there, and you see that it's gonna come down right here. You could even get puts right there and reverse your position and make your money. So you gotta know when that trade is not good. If you know about that, just get out. You know, that didn't work. And then we got 7, not following the rules of trading systems. That's the most important too. If you have a trading system and which it says, okay, you're gonna buy here, or you're gonna wait for this to do that, and you don't follow it, then you're cheating yourself, right? You're cheating the system because you want to make the money, but you don't follow the rules of your own system. So that's not gonna make you money. Planning for a move or filling one building, but when finding yourself immobilized to hit the bid or offer, and therefore deny yourself the opportunity for profit. So that's when it's more like fear, or the fear to be wrong. And then you feel immobilized to like, what if I go isn't, and then this crash or whatever, those thoughts are gonna make you immobilize. Are gonna make you not take the opportunity because you think, no, this is not gonna work, or no, if you see the opportunity and you got the sense of the market move, the market is gonna make this, you gotta follow. You gotta just go, hit the bid, hit the offer. You got number 9 is not acting on your instincts or intuition. It's the same thing. Like you gotta act if you're, but when you're in the markets and looking at charts, looking at price action, everything, you're gonna start getting a sense of how to, when you know, when you see a pattern building up, you can probably feel that it's gonna go. Like that happens when you're spending good time on the market, like watching the markets and everything. You get that signs of intuition, like you feel it before it's gonna happen. You gotta like go ahead and follow it. Go ahead and you know, because most of the time our subconscious is more smarter than us. It's gonna know better and faster than us. So we're gonna follow that 100%. So we got number 10, establishing a consistent pattern of trading success over a period of time. And then giving your winning bags to the market in 1 or 2 trades and starting the cycle all over again. Who feel with that one? Like you're winning for a period of time, and then you get all your winners back in 1 or 2 trades. Most of us did that, and some are doing it. And that's what happens when you're not following a money management risk. You know, when you're putting too much money in one trade. That happens when you're winning. You're getting more, you get your ego, you get more, you know, you feel like you know where the market's gonna go just because you're winning. And then what happens, you start sizing up your position, scaling up, and then 1 and 2, and then you get 1 trade, you lose all your winning money from your previous trades, and then and then it happens that you get the number 5, revenge trading, and then you say, okay, I want to get that back. Boom, you put more money, and you can lose more, you know. So you lose more than what you have to. So that's another thing. So we got here is skills to be quiet, to excel in any activity, whether it's mental, such as trading, or psycho, such as swimming, physical. I'm sorry for my bad reading. I mean, as swimming, physical or swimming, we need to learn specialized skills. These skills give us the necessary requirements to look at, think about, and behave toward events in manner different from what we used to or what we may have been taught. However, beyond the sheer mechanics of the activity, which just about anyone can master, lies a particular thinking methodology or strategy that leads to excellence. Although few people have it, such a thinking methodology can nevertheless be learned. Any thinking methodology requires a series of approaches to goal and problems. These approaches might be better described as a mental techniques, even skills of thought application. For example, one such skills might be the ability to identify those conditions that are conducive to making a common trading error before it actually happens. Other techniques or skills include, so I'm going to read you, number 1, learning the dynamics of goal achievements so you can stay positively focus on what you want, not what you fear. So that dynamic is like sticking to the plan and visualize what you want, not what you fear. That's pretty much. Don't even care about your fears. Go for what you want. Stay positive, and that's all. You're gonna attract the positive, not the negative. Straight to your goals. 2, learning how to recognize the skills you need to progress as a trader, and then stay focused on the development of those skills instead of the money, which is merely byproduct of your skills. So it's when you want to trade just because you want to make money. Well, we all want to make money, but when you're thinking about that and you only trade with that in mind, you can make a lot of trading errors. You can see the wrong pattern. You can even have a sense of marking direction, and you're just gonna go in the trade because you want to make money. So that's a wrong methodology. You always got to stick to your system and try to trade right, not try to make money. Try to do the flawless trade. So that happens is that you need to wait for the setup to build. You're not going to trade every day just because you have to trade every day. You got to wait for the setup to trade right. And if you do that over time, you're just going to start making the money. Learning how to adapt yourself to respond to fundamental changes in market conditions more readily. That's what I'm saying. Like, you got to know when the market it's changing. You got to perceive that. Don't think about money. Don't think about, just focus on your trading. So we got a number 4. It's a very, very important. Identify the amount of risk you're comfortable with, your risk comfort level, and learn how to expand it in a way that is consistent with your ability to maintain an objective perspective on market activity. So yeah, that's the most important thing when you're trading, because you're gonna know like how much you can risk without feeling emotional. Like, if you're trading with too much money, that you're gonna be looking at your P&L over and over. Every tick down, you're gonna look and see, oh, how much I'm losing. Oh, every tick up, you're gonna see, because you have a lot of money in it. So that means that you're not comfortable with the risk. You know, any moment the market could dump, and even if you have a stop loss, that thing could gap down to your stop loss and not fill you. So keep in mind that whatever you're gonna risk for every trade, it has to be something that you afford to lose at all. You have to go to zero. You gotta look at it as it was nothing. Like, that money is there to make you money, but if it's gone, it's gone. You're not gonna feel, emotional attached to it. It's a soldier. You gotta protect the soldier, but you gotta risk the soldier too. You gotta know how many troops you are able to risk. And if it happens that you know that the market changed and you see, okay, this isn't gonna be good anymore, and you're able to pull your troops and you lose some, okay, you're good. But if something happens and you get destroyed, you gotta know that you didn't send all your troops. You're selling some that you're afford to lose them all. And that way you're gonna feel more fearless about what the market is gonna do. You're gonna let your key level set. You're gonna wait for the breakout, and you're gonna write it to the price target without looking at your PLR. You're just gonna look, oh, hit the price target, I'm gonna see, boom, sell, you got your money right there. That's pretty much. But if you have a lot of money on it, I bet you're gonna be looking at every tick up or every tick down. So we got here learning how to execute your trades immediately upon your perception of opportunity. Yeah, that's another thing. As soon as you see that, when you have a setup ready, and you're looking at the key level, you see they're broke, you see that it's holding. What are you waiting for? As soon as you see that, you gotta go in for it. Don't wait for more conviction. When you have a signal to buy, don't hesitate and just buy it, because you don't know if it's gonna go or not, but you gotta be there. And that's gonna change with a trading system, because if you had a trading system that you do 20 trades and you make money on those 20 trades for that trading system, you need to trade them every time you get a signal, no matter what. Because that's your system. You gotta trust it, and you gotta act immediately. And then we got number 6, learning how to let the market tell you how much is enough, instead of assessing the potential from your personal value system of how much is enough. So that one is like, the market only goes up this much, only goes down this much. And you're not gonna be like, when the stock is going up and then say, oh, it's gonna keep going up, it's gonna keep going up. That's not good, like trying to think that that thing is gonna still going up. That is gonna teach you about lesson, because you don't know how much is gonna go up, but you gotta learn how much is enough. And the market tells you. The market tells you when you see any any correction, any reversal candle or something, it's telling you that's enough. It's gonna reverse, and you're gonna know that, and you're gonna get out. I'm gonna show you with the charts and everything how to identify when the market is about to pull back with candlestick patterns. All that I want to show you guys that, but that's the thing that you gotta act. When the thing is gonna come down, get out. But that's something you learn with technical too. Then it says, learning how to structure your beliefs to control your perception market movement. So you got your beliefs. Don't let your beliefs, like when people says, oh, that market is gonna crash, and I know that, but if you don't, nobody knows when the market is gonna crash, right? Learning how to achieve and maintain a state of objectivity. Learning how to recognize true intuitive information, and then learning how to act on it consistently. So those are the things that it comes with this book. And I think you guys should read it first before before the technical analysis, read it and take in everything. Read it 3 or 4 times if you need it, because it's gonna show you, you know, his story. Pretty much just the story of this guy is amazing, you know. But he started with psychological trading. So I recommend doing this, learning this, reading this book first, and then we're gonna jump to the next session. It's gonna be top-down analysis. So I'm gonna show you like how to start a technical analysis from top to bottom. So that one is gonna show you to watch from marker sector to your stock. So it's pretty cool information. So tomorrow I'm going to be doing that same time. So pretty much this first section is for me to tell you about this book. That is a cool book for you to read before getting into trading, really, because most of the mistakes that we do traders is more psychologically than anything, you know. Like all these mistakes, the revenge trading, what was the other one? Revenge trading and refusing, you know, when you're losing and you don't get out, and then not liquidating your trade after you know there's not good anymore, and you keep holding and you say, okay, I lose that much, I'm gonna just let it go, just see if I break even or something. That's something that is gonna kill your account. So this book is like pretty much like coaching you how to change your thinking on the market, you know, because we come from a social system, from religion system and all that, but the market is something different. It's something like it says there, it looks so easy, but some people is like it's not, you know. I cannot win any trade, or I'm losing my money. It's because you need to think differently and know how to act on the market. It's different than just click a button, buy a call, see where it goes, you know. It's more and more different than that. So I'm gonna try to put this ebook or this file on the Discord. So if you guys want to, like, if you can get it through audiobooks or something like that, if you want to buy it, but I'm gonna try to put it there free so you guys can start reading onto it. And then when I get more in depth with technical analysis, patterns, and all those good stuff, this is gonna be the, you know, the mindset is gonna be the more, it's gonna complement the whole thing. Like you're gonna have winning attitudes. Like you always gotta go with your mind positive in the market. Like if you see something, if you're seeing that pattern, you gotta be positive about it. You gotta just trust your system and go ahead, you know. So I'm gonna post this link or this file for everyone to download it. I don't know if it's possible, but I'm gonna try it. If not, just you guys can send me a DM and I'll reply to you with the link so you can read this book. It's gonna tell you about all this stuff. It's gonna train you for your mindset. So you're gonna, and then those 4 videos that I post, those are great too. they're not showing you a trading system or a technical analysis. It's more of a thinking methodology, like the book said. So I'm gonna recommend that first to be the first thing, the most first thing to do, so you can be in the markets, because with the same thinking methodology that most of us have, it's not gonna make it through. You're gonna make the same mistakes over and over, and this teach you a lot of that and give you examples and all that. So I'm gonna post that on there, and so you guys can download it. But tomorrow I'm gonna start showing the top-down analysis, and that's gonna be something. Maybe you guys know something about what I'm, but probably you're gonna find some new stuff, some cool stuff. So I think that's it for today, guys. Just gonna want to talk about this book, and that's the mindset, my methodology, a different way of thinking. This is just an introduction for this kind of course that we're gonna do. It's gonna be like 6 sections. So we'll be top-down analysis, and then we go to support and resistance, and then we'll go for we're gonna go for price pattern and then candlestick patterns. So it's gonna be cool. You guys are gonna learn a lot here. So this is the book, and I'll post it right there on the tab, hopefully. If not, just send me a DM. But tomorrow we're gonna talk about the top-down analysis. Okay, guys.
Thank you for your time, Trader. Appreciate it. It was a good class.
Oh, thank you. Welcome, man. Have a good one.